Today's video is another listener question. Saran Kumar has asked me how to invest in gold here in the UK. Us Indians love investing in gold, don't we? Our parents, our grandparents have told us that gold is a great asset class and to invest in gold. But here in the UK, storing gold can get quite expensive, and sometimes having gold in your house is not very, very safe. So, here are 5 different unique ideas from investing in mining companies to investing in physical gold. At the end, I'll tell you how I personally invest in gold. The first way is actually buying physical gold, but as a share. So, what I mean by this is actually buying physical gold that you can touch and feel, but it's bought in a share format. So, because it's in a share format through an investment platform, you can buy partial units of it. So, currently, the 1 unit of gold share is about £1,800. So, you can buy, say, £200 worth or £500 worth. So, you can buy partial units of this big fund. And like we all have problems with storage of actually buying physical gold, the insurance price goes up, the storage cost goes up, etc. There might be added on costs, so this may not be the cheapest way, but I'll show you how I do it. There's lots of different platforms here in the UK, but the platform that I frequently use is called eToro. If you want to check it out, you may want to use my referral link, and we both get a little bit of cutback, but I've put it in the description box below. So if you go and search gold, as you can see, is about 1,800 odd pounds. You can access lots of different information on this. I particularly like the stats of this. This shows the short-term trend, 1 month, 1 week, 2 weeks, 3 months, 1 year, 3 years. So you can see how the price is fluctuating. If you look at the 1 year mark, you can see the prices are quite significantly up and down. If you look up here, it shows that gold is actually a CFD. So what a CFD is it's an option to leverage. So for example, if you put in say £100, you can double that amount. You can 2x that amount or 5x that amount, even 10x that amount. So while the market is doing well, you can double your profits or 5x your profits. But if it's going down, it doubles your losses as well, or 5x's your losses. So if you're thinking of buying gold as a CFD, do not buy it on leverage, because as you can see, it's a very fluctuating asset. So if you double x that amount, you might lose a lot of money as well as gaining a lot of money. The second way to buy gold is to buy a gold ETF. A gold ETF is just a computer that tracks the price of gold. So you get all the benefits of buying gold, but with the ETF, because it's not actually buying physical gold, you do not get the extra added expenses of storage and insurance and the added costs that associated with buying physical gold. So this might be a very good option for people who want to track gold prices but do not want the extra expenses. Again, to find an eToro ETF, just type gold, and that's the gold ETF. If you go to the stats, you can see the prices are just very similar to the price of gold. The third way of investing in gold here in the UK is to actually buy gold mining companies. When you're looking at investing in gold mining companies, there are actually 3 options. The first is investing in the biggest mining company, which is called Gold Barracks. If you look on eToro and search gold, and it'll come up as the first few searches. Gold Barracks is actually a Canadian company, but they mine gold all over the world, and they are one of the biggest players of mining gold. And if you look at the stats, the price is very similar to the price of gold. It goes up and down very much in line with gold. The second and third option of investing in gold mining companies is to invest in a collection of companies rather than investing in one single company. Like investing in gold barracks, you invest in a collection of companies, a group of companies. So there is 2 different versions of the stock. The first is the big boys, the big players, the bigger companies, and there is a junior version of this, which is the smaller companies. And the ticker symbol on eToro is GDX or GDXJ for the GDX Junior. There is, however, one small problem that makes these mining companies slightly more risky than just investing in pure gold. These gold mining companies use tractors and trucks and equipment that run on petrol. And as we all know, the international price of oil and gas and petrol is through the roof at the minute. So these mining companies are not only influenced by the price of gold, these mining companies are also influenced by the price of petrol. The next option option for investing in gold is actually to buy gold jewellery or gold bars and things. There's several jewellery shops around the country, especially in Indian areas in London, Birmingham, and some shops here in Manchester as well. There's even a Joy Alucas down in London. So you can actually buy gold jewellery from these shops. A lot of my friends that I know, they buy gold jewellery from Dubai when en route to India or back from India, or they buy gold from India as well. So those are some options of buying gold for actually gold jewellery to wear and to enjoy wearing gold. If you're looking at gold bars and gold coins, there's several options on the internet. The two options that I've heard quite frequently, again, these are not personal recommendations because I've not used it myself. The two options that I've heard of is Bullion by Post and royalmint.com. I'll just show you one of these websites. So the Royal Mint website, if you go to shop and you can look for gold, and as you can see, you can invest in bars or in coins or commemorative coins as well, especially around the Jubilee and things. There's Jubilee coins and things. So if you look at gold bars, you can buy by weight, so 1 kg, 500 grams, 10 grams, etc. And the price varies according to the weight of gold. The big problem with gold jewellery is when it comes to storage. Storage can be a problem. So little gold jewellery and things, you can probably insure it against your home insurance, but big bars and things, you'll struggle to insure it even with your home insurance. The next option for investing in gold is gold vaults. So this is more for the safety of your gold. Metro Bank offers safety deposit boxes. If you go onto their website, they tell you the size of the vault and how much it is per year. Also, the other websites that I told you for buying gold bars, Bullion by Post or Royal Mint, they have vault options as well. So this is again back onto the Royal Mint website. If you go to invest and the vault, and this will give you information about their secure storage, and Bullion by Post has a similar facility as well. Finally, I'll tell you how I invest in gold. So this might be very controversial, but I do not invest in gold. I do not invest in gold yet, but I might do in future. And I'll show you exactly why I do not invest in gold. If I go on to just a Yahoo Finance, so the top bar, if you search for gold, you will see the price of gold. And if you bring that to full screen, you can see the prices up and down as we saw in the previous chart. And if I go on to the 5-year mark, you can see that the prices have gone up steadily over these last 5 years. So that way, gold is a very good asset class. But I'm going to add a comparison chart. I'm going to compare the S&P 500. For those who doesn't know, S&P 500 is the largest 500 companies in America. Now you can see that although it started more or less at the same point, the S&P 500 has grown faster than the price of gold. So at present, I'm looking at growing my wealth as quickly as possible. So for me, at this life stage, investing in gold is perhaps not an option. I do buy gold, a little bit of gold here and there, but that's just to wear and to enjoy and to gift and things. But gold as an investment, I do not do, because investing in the stock market gives you better returns than just investing in gold. But gold has one very, very important use, and I'll show you in the chart again. As you can see, whenever the S&P 500 has dipped, the stock market has dipped, gold prices has remained steady. So here, just around 2019, there was a dip in the stock market, and the gold investment has remained steady. And here, around early 2020, during the COVID crash, the stock market dipped quite significantly, but gold remains steady. So this is one of the main functions of gold. It sort of steadies your portfolio. When the stock market is dipping, if you have some gold, it doesn't dip as much. It sort of steadies your portfolio overall. For me personally, I'm more focused on growth because I'm growing my wealth and I've got my income and things at present to fall back on. But at a later date, maybe when I've got significant savings and then the dips will hurt me more, then maybe I'll look at investing in some gold. Or maybe at retirement, when I want to have more stability than more growth, then maybe I'll look at investing in gold at that stage. For me, it's not right at my stage in life. It might be right for you. Let me know what are your thoughts after listening to this. Are you going to invest in gold? Which of these options are you going to choose as an investment? Let me know in the comments section below. If you've gotten any value from this video, please give me the thumbs up like button and share this with your family and friends. You may want to check this other very popular video of mine on investing. Until next time, stay safe.